There are some trends. There are some trends. We have some incredible investors in the room. I'll get to them quickly, and then I'll set the stage for today. Phil Pearlman, it took a week off. Phil, does it upset you that no one looked for you? We didn't know you were gone, yet no one made a call.
I love it. I embrace that.
Anonymity.
Anonymity,
Your mic,
super chill in the background. It's all good.
your mic is a little low. Michael Parekh joining us from the Conclave in Houston. He's looking very. Is it a Pope outfit that you're wearing in memory of the Pope?
He could be the new Pope.
Yeah, he's the AI Pope. He's the AI whisperer, and until the Conclave comes out. Have you seen that movie, The Conclave? Very interesting and dark. Very dark. But very good. What an actor that Ralph Fiennes is. And sitting in for the Pope, who has better takes than the Pope, Michael Parekh, and then interchangeable geranimal guests. We've got Adeniyi from Sui, co-founder of Mysten Labs, and if he changed glasses with Shomik, we'd all be confused. And the Shomik Ghosh, who I've been friends with for a very long time, at one of my favorite venture capital firms, the legend Ed Sims at Boldstart. Shomik Ghosh, software investor. Where are you today, Shomik?
In Burlingame, of all places, San Francisco.
Burlingame. Shomik loves software. Shomik loves
close
investing.
to the airport. Love it.
Shomik loves being right. I think there's something about just being right that is so attractive. We're all wrong all the time, and markets humiliate us. But there's just something about the game that we love being right, attracts very smart people. Shomik, one of them. And then Adi, calling in from where? The blockchain. California.
Yeah.
Where were you born?
In Nigeria.
Place.
You were born in Nigeria.
Oh, wow.
Yeah, born in Nigeria. Yeah. Left when I was 8 years old, but grew up in England.
Grew up in England. I can throw another shrimp on the Barbie.
Is it Legos or Lagos? I always get that.
It's actually, well, people say Lagos, but it's actually pronounced Lagos, but, it's Portuguese.
Lagos,
yeah.
Okay, good.
Yeah.
All right, thank you. I just wanted to get that right.
And co-founder of Mysten Labs and creators of Sui, which is very popular on Stocktwits. It's a blockchain, very speedy. We'll get into that. The outline for today's show is because it's all fun when the markets are going up. We might have hit peak degeneracy, peak fun over the last few weeks. I'll call myself guilty as charged. A trend is a trend. But now we've got these mini crashes in high-flying stocks, from Robinhood to DraftKings to Palantir to MicroStrategy to Bitcoin to Solana to Tesla. To AppLovin. Why? All right. There's two people piling, not piling on, but really.
Awards, Howie.
Sorry. Let's pull up the hashtag awards first. If we could pull it up. Thanks, Phil. Stocktwits is having the first ever kind of the ESPYs of business and finance and investing. They're called the Hashtag Awards.
That's an awesome logo.
Yeah, it's an awesome logo. Thanks, Jordan Bornstein. We want to take to pay tribute to the people around the financial web, all the way back to when it really started with Kramer and Street.com and a bunch of people, Barry Ritholtz, to today with Sui and people like Shomik that are investing in startups and talking about stocks and writing on Beehive and writing on Substack and being on Reddit and, of course, Stocktwits and Twitter. So this is kind of the open financial web awards for people that just love stocks. And so we're celebrating the 10 or 12 categories that we think will be most interesting over the years. The winners will come from wherever they happen to be best. We've been tracking them for years. We're doing community voting. This will happen April 30th in New York at the Stand, an incredible comedy club. We'll have live comedians. There'll be roasting, and there will be awards and prizes. But most importantly, just kind of a celebration of why we're all here, really the markets. The good, the bad, the ugly, the ups, the downs, the grifts. All right, so let me frame today's discussion, and I'll hand it off to Phil. Everybody gets to chime in on what they want to chime in. We have been in this, I would say, nirvana world. Stocks go up, valuations don't matter. rates have been going up as well, so that's been confusing to some of the bulls. We've had stocks that have defied gravity in the degenerate economy. I call them Solana. We call it Bitcoin. We call it Robinhood. We call it Coinbase. We call it MicroStrategy. We've had that spill over into fake pills and blue pills with HIMS. We've had it surge into Carvana, into Tesla. It's been fun, right? And I call it the Degenerate Economy Index, Degenerate Economy, because if you build it, they will come. Cue the music. We're slow on that. Okay. The Degenerate Economy Index, which is just been fueling. He will come. Anyways, that movie was fantastic. It's never been more relevant than right now. If you build shit, people will trade. We probably had a top tick in hindsight with the Trump and Melania back-to-back meme coins, right? It was fun. It was silly. He hadn't yet been president. The crypto czar had not been named. And now we're in this little pullback, and it's a rather big pullback. Stevie Cohen, we'll play the tape here in 30 seconds, and Brad Gerstner probably had two great takes. Stevie Cohen calls it, he's worried about austerity. And when Stevie Cohen goes public and says some negative stuff, you should listen. Following the price and tape is one thing, but Stevie Cohen coming out and saying for the first time in a while that he's bearish. Go ahead, play a little bit of this tape. You can find it on Twitter.
This is one of those moments where there's really a lot of uncertainty, and I have pretty strong views here. When you take it's a brew of tariffs. I mean, tariffs cannot be positive, okay? I mean, it's a tax, and you can imagine tit for tat if the U.S. does something, implements a tax on somebody, somebody else is going to, perhaps raise the stakes and raise their tax back. So taxes are never positive.
Okay. So go listen to it. For all the bootlickers out there in Silicon Valley and everybody shining Trump's shoes, you're full of shit. Okay. Stevie Cohen's traded more today than you've ever traded in your life. And he's just calling you bullshit. He's not calling you out directly a bullshitter. It's a fucking tax. Okay. So we're headed to some austerity. And firing thousands of people at your whim, good luck. Do it. I can't stop anybody, but don't think it's not going to affect the markets. Okay. So that's him. I think from our own side of the world, Brad Gerstner and Bill Gurley, the only pod I now listen to outside of this, play the Brad tape. He's talking about such a rapid moment in tech, and this is what we've been talking about here with AI. Who really wins? Nobody knows. And so, Brad, play the tape here. It's a great clip from the BG2 pod. The only pod you really
matter for tech investors. Let's presume it goes either way. What's it going to mean to how a tech investor should be thinking about the markets and tech stocks?
Yeah, I mean, just think about what were the three topics we talked about today. The first one was like just massive technological uncertainty, right? Like where you said it, it's a pace of change you've never seen in your career, highly disruptive, companies that are valued at $150 billion that are being challenged by, a Chinese startup on a shoestring. So you and I would both say our ability to forecast the future as to where this is going, right, is challenged because it's moving so fast.
All right. So two great, Michael would agree. I think hopefully gentlemen in the group agree. We've all been around good investors. You like them or not like them. When Bill Gurley says this is the most change we've seen in this many years, and then you combine that with this much money, you combine it with deglobalization, taxes, an angry White House, for right or for wrong. You have a degenerate economy. People are trading a Nancy Pelosi portfolio and actually experiencing some success. That's not going to end well. And then you have this AI confusion, this war in AI that no one knows, and everybody's acting like they've never been more confident in everything than they can, combined with, like I said, degenerate economy, peer-to-peer investing, the blockchain, grifts up the yin yang. Phil, that's the cocktail that we've got to get through today. And what we're seeing in stock prices is stocks go down, right? We're seeing a lot of air coming out of stocks in the last week. Palantir down from 130 to 80s, HIMS down from 70 to 40, Solana at 240 to 140, DraftKings 55 to 41. Tesla, the week after Trump's president, 475, now 300. These are serious pullbacks. Phil, take it away.
Okay, so let's talk about this. So I love the way, first of all, I love the way Howard takes everything we're going to talk about in the show and just like there's nowhere to begin now. Like it's the whole outline. He already talked about it all. So thank you very much for joining us. Have a great week. So let's start with Gerstner's comments about the uncertainty, because it's already been a long time that analysts have been talking about the acceleration of technology. Moore's law goes back, I don't know, Michael, 50, 60 years, more than that
plus.
probably, the cognitive revolution or whatever. It goes back forever. And we've seen this acceleration. And, they used to talk about the quickening of the commoditization cycle, and all of these things have to do with it. And now, so we have this faster and faster, 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 faster. And now with AI, all of a sudden we have like this hockey stick on top of the hockey stick. And so for me, and I'm going to throw this out there, but for me, that is just really a volatility play. Like the more uncertainty there is, the more volatility, the more things swing and change quickly. Michael, go ahead.
I couldn't agree more with Brad Gerstner's quote that the technological change is something we've never seen, and I think he's understating it. When I started my Substack 645 days ago, daily posts ago, literally I said my entire career of 3+ decades in technology was but a dress rehearsal for what's about to come. And 2+ years into this generative AI thing, we are just at the beginning of the real technical changes that are changing so fast that even the hundreds of billions of dollars that have been invested over the last couple of years are nowhere enough. We are so early on this stuff. The change, not just in AI and tech, but across so many technology and industries, is going to be extraordinarily cumulative. And I couldn't agree more with the starting premise of this discussion.
Well, Phil, and one thing I just wanted to add on your volatility thing. So if you look right now, the dollar is down. The 10-year yields have gone down in the past, I think, 2 weeks. They've gone down from 4.7 to 4.3. And with all of that, if you said then, hey, like the market would also be down, it would be completely, you'd be like, you're batshit crazy, right? It would be the opposite. It'd say like, hey, this is going up. I think this is really interesting where you're having these correlations start to happen with like, the uncertainty around tariffs and the uncertainty around this and that and what's Trump going to say next and all this stuff. And it creates this just like general degrossing of risk, regardless of if you're in treasuries or dollars or private markets or public markets or whatever.
I'd just like to add, Howard, you cued the Stevie Cohen. Couldn't agree more. I've known him since the 90s, used to cover him at Goldman Sachs. One of the smartest people ever. When he starts with just focusing on the tariffs, I went back and read my history books again, Smoot-Hawley in 1930s, early 1930s. Right now, everyone is thinking that the tariff thing is just transactional. That Trump is a transactional fellow. He just puts one on and it's a negotiation and everyone just cows down, etc. Yeah, that's the early stage of the negotiation. What we missed in the Smoot-Hawley, and it's happening, it'll happen again, is this gets very quickly very emotional. People and countries need respect. And when you start to go and push without the counterbalance of respect, people, countries, it starts to fall apart. And that can take a decade or more to dig out of. So I couldn't agree more with Stevie Cohen saying, watch the tariffs. This is a big thing. Everything else we can barrel through. Shomik, you're talking about all these specific, macro trends that we should be paying attention to. It doesn't matter if all of a sudden these jackets, these things that we're wearing are going to go up 40-50% at Walmart. Guess what? the price of eggs is going to look like oh my God, we were worried about the price of eggs. I mean, that's where it's going to be in 6 months.
Yeah, with the respect, and then we'll let Adi go. But with the respect, you saw it. Canada was booing the national anthem. Like, not funny. I'm American, right? That's what I feel in my heart. I was born in Toronto. Um, I think the world was a better place when Canada hated Russia, even though it was stupid, than Canada and the U.S. For no reason, just respect as it goes to. Adi, how you see it as someone born and traveled the world?
I am a bit concerned. I think the talk of tariffs is something that I studied in school, interestingly, and it's not something that genuinely ends quite well. I mean, I'd love to see. In my side, I thought, I think my thought process is like maybe it's a bit of a negotiation tactic. We'll see where it goes, and let's see if it plays out the way everyone's thinking. But I'm hopeful that the US can come over this, can get over this, and actually resolve this issue. But I think if we go down a tit for tat path of tariffs versus tariffs, the only people that get hurt are people on the streets.
And it's I agree, it's a negotiation tactic, is the way the smart people are looking at it. But recognize that everything that is being negotiated is being amplified every day, multiple times a day, by Elon to his 200 plus million subscribers, and basically saying these guys are idiots, these guys are criminals. I mean, that just beyond crosses the threshold of respect, right? And people get emotional. Ultimately, emotion trumps rationality, because we run on our lizard brains, and organizations, companies, that's what I really worry about. And it takes a long time to fix the respect business. And I just I agree with that.
I think the top,
you disrespect people, then you pile them into losses. Trump coin, Tesla at 480, now 300, Palantir 130. Alex Karp I think, did a wonderful job building his company in stock. But then we just see this happen with they start believing, and then they start shitting on people. It's like, have some respect for how the markets work. And the markets, do not beat the markets. That's why Stevie Cohen, I'll listen to Stevie Cohen and Brad Gerson, who manage billions of dollars and have been humbled, versus these people that just think that they start believing their own shit.
The thought process we're seeing, though, is that, hey, that government is way too big. There's way too much money being spent on stupid, dumb stuff, which to a large degree, it's true. But would that be enough to offset any impact on the tariff side, right? So I don't know if that's a yes or no answer. There's smarter people in this in this panel that could probably dig a bit deeper than I could.
All right, Phil, next.
I have no idea. Just Adi.
We'll say it louder so people really know.
So let's just stay with you, Adi. Why don't you tell us about Sui? And we're going to change things up. We're going to come back to some of these charts of companies that have just gotten destroyed recently in Solana and so forth. But Adi, let's just talk about what you're doing, because it fits in. Number one, you're building, and number two, it's incredibly fascinating.
Yeah, it's number one, we're building, and number two, we're building in the US, which used to be the most dangerous place to try and build a crypto business for quite a while with the previous administration. So when we were at Facebook, we're a team that were at Facebook trying to launch Libra that the government eventually shut down and never got to see the light of day. But while we're at Facebook, we realized that ultimately companies don't decide to be evil overnight. Like over time, because of regulation, but just because it's easier to build things faster as an insular company, decide to start taking rents. Like Apple charge you 30% for running apps, right? Facebook own your data. Google follow you all around the internet wherever you go. It just becomes part of a business model. And the reason why this happens is there's no like common layer for people to agree on what has happened. So what Sui is we saw a massive gap while we we're at Facebook. Like if we could build this is a multi-trillion-dollar opportunity where we build a single layer that everybody can agree on what has happened in the world. So if you want to agree on what's happened with stocks, what's happened with bonds, what's happened with the tickets for concerts or whatever is digital, because the world is moving fully digital regardless, right? Your data is digital, your assets are digital, your money is digital, everything you do is going to be digital. And for that to happen in a very frictionless way. We need a common layer that everybody can agree on digital assets. That's what Sui is. It's more than just a layer one or a blockchain. It's really this big, massive gap that's been missing from the internet for the last 20 years that we're rebuilding. It's a layer that sits on top of the internet that allows you to agree on what has happened. We call it a coordination layer, and that's what Sui is. And built by a bunch of leads that were at Meta, myself included, working on building search at Google, infrastructure at Facebook, and programming languages. So very deep expertise in our team.
So, Adi, I have a question actually, real quick. Just like when you launched, I remember, like it was like right around the FTX kind of implosion. I think FTX was actually going to be a big backer, trader, whatever you want to call it. And then now here you still are building, right? And so just like talk through that craziness. Like how'd you deal with all that?
Yeah, I mean, to be clear, FTX bought a $100 million stake in our company. And I remember when everything was going haywire for FTX, and we immediately got in contact to figure out a way to actually buy back our stake. So we paid close to par, something to the tune of $96 million back for the stake that FTX had purchased in our company. That was a big bet on ourselves. Imagine you, as a startup, you've raised 300 million, and then you're giving back about 100 million, which in a bad market as well.
How close was that to the news? Because I know a lot of people that tried, including myself. How close was that to the news that they picked up the phone and were willing to do that deal? Had they just invested, or was it months before?
So they'd already invested. It's probably like 3-4 months or something like that,
Okay.
that expired by that time. And when we started hearing rumors and things going really, really bad, we thought the right thing to do would be to get the money back to those who had lost significant amount of funds. So rather than holding on to it as a company, that turned out to be the best investment we've ever made as a business. Actually, that stake is worth a lot more than it is today, and we're holding on to it with tight fists. But generally, it was a really turbulent time to have launched a project. After our experience of trying to launch Libra and seeing the regulators shut it down, or at least the government shut it down, we felt that maybe, hey, people might think we're Facebookers by heart, and it's like a secret Zuck project. So we wanted to make sure we get out the door as soon as possible, because we are not. There's no affiliation with Facebook. Meta is not an investor in our company. We're an independent company invested by Andreessen Horowitz and other top VCs and investors as well. So it was an interesting time with the FTX debacle, but I think crypto's pulled through many debacles. We just went through the Bybit one as of recent, so it will have many of these other things as well.
Great. Yeah, so we're getting a pullback in Solana, we're getting a pullback in Bitcoin, and there's people, with last year with the ETFs launching, the spot ETFs, gigantic, massive ETFs, you have all of these new investors in Bitcoin especially that were never around for the multiple crashes that we've had. And there's that term Lindy effect of like every time it survives, every time this asset survives a crash, it just makes it that much stronger. So, I mean, just a comment and, just a comment for anybody watching that's kind of a new investor in Bitcoin. You're seeing this pullback here from like 109 to, I don't know, wherever it is now, 88 off 20% or whatever.
So I've been in Bitcoin since late 2011. So I've been very early in the space. I've been buying Bitcoin, trading Bitcoin.
That's a hell of a
Bitcoin. So I've been in the market for a very long time. This is nothing. You've seen nothing yet. We've gone like, I remember we went from like 30,000 all the way to like, was it like 2,000 or something?
It was
something
like
ridiculous.
2.
Yeah, like we've seen crazy pullbacks in BTC, but you realize that these trends always happen in the space. It's always going to be a volatile asset. I don't think we're going to reach a world where Bitcoin is this smooth sailing trading asset class. It's still in price discovery as far as I'm concerned. And every time you have a halving of, which is you reduce the amount of rewards miners get, it actually reduces the amount of Bitcoin in circulation. It's only going to have the price go high in my view, and I've only seen it happen since BTC started. I still think it's a terrible asset class, a terrific asset class. Sorry. So
why don't you tell us a little bit before we move on? Why don't you tell us a little bit about what you guys are doing with Walrus? What is that, and how does a dumb schmo like me get involved?
Yeah, good question. So remember what I was saying about companies generally don't try to be evil from day one, but over time their business model forces them to. One of the areas that's problematic is user data. So anywhere you go to, whether you're using Facebook, Instagram, whatever application you're using, generally you have no ownership of your data. And there's no way for them to give you ownership of your data. The infrastructure just isn't there. So Walrus is this next generation layer that gives you programmable storage. So now, as a builder, as a developer, when users provide data, I give them direct ownership of the data they create, which means they can monetize it under their own rules. They can transfer it to whoever they want. They can give someone else edit and access rights. Creators are more empowered with what they own, and we think that ownership economy is the way to go. So you now have a world where corporations don't own the data that they build on you. You own your own data. You can decide to share or disclose that with whoever you want. You could also see this as a replacement for AWS or Google Cloud Storage as well. AWS S3 or GCP, but a public data store with encryption that's coming inbuilt as well. So you now have something way more robust, way more distributed than AWS will give you, or a Google Cloud Service will give you as well. So for the first time, we have global storage that's programmable. You can set rules. Every time someone trades on a stock exchange or on a DEX, it will pay the storage fee. So you never get a bill from a cloud service provider ever again. And the additional thing is these hacks that we recently have, where 1.5 billion was lost, would never be possible with like a Walrus and a Sui, because the data is verified and the application is verified on the actual chain. So it's impossible for an attacker to go in and change that code, which is something we see all over and over again in crypto. So it's going to offer a greater level of cybersecurity than's ever been possible before as well.
That's cool. Shomik, you invest in the space. Any other questions for Adi?
Well, I mean, I think one of the cool things that you guys did was, a lot of the other blockchains are built around Rust or Solidity, right, and stuff like that. Like you guys actually built, I believe, Move, like Sui Move or whatever. Like you built your own programming language. Talk about like why did you do that? I'm just kind of curious. Like that seems like a crazy thing to do. So.
Yeah, so we did a lot of research at Facebook about programming languages because we wanted to build a platform for sending money as easy as sending email. And there's no way in hell we could go in front of regulators and say, trust us, trust me, bro, this EVM thing actually works. Our research shows that it's impossible to make this EVM thing secure. It is impossible to make it secure and performant. So you cannot build a global monetary system on EVM, nor can you build a safe monetary system on EVM, which is something that's Ethereum is built on, Avalanche and many other chains are built on. It's inherently unsafe. Separately, something like Rust is not built in a way that allows you to actually build safe code either. So Move was developed at Facebook by a guy called Sam Blackshear. He's one of the youngest principal engineers in the company. He's actually CTO of Mysten Labs. And it's specifically built to make programmable money safe. That's why it's getting a lot of mindshare. It's the newest programming language in the space, and it's already got more than 10% of the mindshare and developers in the Web3 space, and it's growing. And I hope more people take advantage of it. It's really a layer that makes programming money safe. You don't have to worry about all the crazy checks and hacks that happens on Solidity and Rust-based systems that's been happening over and over again. We predicted 2 years ago that there'll be a billion-dollar hack, and it's happened. And it's going to get worse and worse. But we've been saying it for a long time. There'll be more of these things happening without Move.
So let's talk about that. Lazarus. So the news cycle now is so rapid. There's so much happening so fast that it's really difficult for us to sort of stop for a second and pick out important things and go, okay, wait a minute. Before we move into the next thing, let's just talk about this crazy important thing that's happening. And so, Michael, so Adi brings up this $1.5 billion hack that just happened. We don't even, we hear about it like 30 seconds later, we're talking about the next thing. But this is a big deal. So, Michael, why don't you just walk us through this a little bit? I know you've paid attention to it.
Sure. There are three things that are very important to understand. Number one, this is obviously you mentioned is the biggest one so far in crypto hacking. We get jaded because there's been just endless, like every month, sometimes a couple of times a month. This thing lost 100 million. This thing they got hacked for 300 million. It's just part of the noise, right? So that's number one. So this is big and that's important. Number two, this was state sponsored. This is North Korea. Lazarus, fancy name, could be a movie, Ocean's 11, etc. The kids who run it are literally on the FBI most wanted. You can Google it. You'll see the pictures. They're very, photogenic kids, literally sitting in North Korea doing this stuff. And they did everything from the Sony hack to the thing today. No, so that was the second thing. Third, this hack was not supposed to be possible because the Bitbyte, literally, it was a multi-signature, meaning multiple people had to access this system through a cold wallet, which means it was not connected to the internet. It's literally Tom Cruise in the first Mission Impossible movie when he's dangling down on a cord. That was supposed to be an air-gapped system. This is what that was. This was, and there were multiple people, basically all, not just one Tom Cruise, typing into that computer. Think 4, 5, 6, I don't know how many, had to sign and say, yes, move this money. Okay. And they moved the money for a routine transaction. Behind it, the North Koreans, I'm going to call them the North Koreans, not the sexy Lazarus group. The North Korean kids, they literally had code behind it that basically diverted diverted the monies into 50 plus accounts around the world. You can still see them. You can try to see them, but you can't touch them because guess what? Crypto is untouchable. Once you hit the button, there is no recourse. There is on the planet, and that's what it is. And last thing I'll say is it's 1.5 billion. It's big, but just a testament to how big the crypto markets are. Right. This is and Adi, you know this better. This is probably it's less than 0.5% of the float. I mean, the Bitbyte, the company, was able to make up the 1.5 billion in losses, all the redemptions that were coming, and they took down the reserves by 50%. But think about that. They had enough money to more than make up and still stay standing as an entity, and the market goes on. But this is absolutely a cost of doing business. The hacking, state actors, non-state actors, and until this stuff gets more secure, and Adi, you talked about, Walrus could have helped, etc. We're just at the beginning of these technologies. People are just figuring out the user interfaces.
I think the fundamental problem, which is what we saw at Facebook, is like something like Ethereum. These systems were built by people who weren't they were not experts in security. They're not experts in programming languages. They're not experts in crypto. Like they're just built as like hobbyist systems that eventually got adopted. And I'm shocked that people are trusting billions of dollars in these things. Absolutely shocked that it's even conceived. So like it's only going to get worse. I'm just going to be honest, right? It's only going to get worse if people keep building on these archaic systems that were not designed to manage billions of dollars. Bitcoin has never had such a hack before. And we wonder why. It never tries to be more than it tries to be. It's literally just a ledger for moving balances from person A to person B. It does nothing sexy, very basic, and it works. It's slow as hell, but no one cares because it just works, right? But ETH tries to be these very complicated...
that's how my wife describes me.
No comment on that one. But
no, but
Adi's more than that.
You just are worried about being invited back. Take your best comment.
No, but Adi's point is right. Once code is out there, it's tough to take it out and then rip it out and put new stuff in. Look, the world still runs on COBOL, as Doge is finding out in terms of the government agencies. I mean, old code stays on forever. It's the coral reef that everything's built on. So it's very tough to assume that the new safe stuff is going to basically make everything so much safer because you just can't rebuild it.
This is built on top of the human code. Adderall.
What are you holding in your hand?
You can build on bad stuff. You just throw pharmaceuticals on it.
Well, the thing I would add to all this is one, like I think this is a reason why in enterprise software, like broadly, security is one of the budgets that constantly either holds or increases, right? Because these attacks are only getting more sophisticated. AI, by the way, is going to create credential compromises all over the world, because think about when you can use v0.dev or bolt.new or Lovable or any of these, prototyping application builders. You can just spin up with a prompt, hey, create a PayPal shopping app login, right? Boom, you get that. And then as a hacker, you can inject that malicious code into someone's, email, frankly, just like, hey, listen, I just need you to re-authenticate into here and check out what's happening on PayPal and stuff like that. Like this is happening for us. And we have to be just like really vigilant But also, I think this is why, from if we think about it from the public standpoint, why security stocks are trading at such high multiples, right? CrowdStrike, Palo Alto Networks, like just insane multiples. But it's because of the fact that it actually in crypto security, we have a company called Hypernative in the Boldstart portfolio. It's one of the fastest growing companies in the portfolio right now because of all this shit, right? That's happening. And so I think just like broadly, security is going to stick around. AI is coming for all of us in good ways and bad ways, and like something that we need to be prepared for.
So Shomik, what are some public companies in that space that you love? Can you just bring them up again and kind of touch on them a little bit?
Yeah, I mean, the large security companies they all have different flavors, right? I would say like you have Palo Alto Networks, where Nikesh is just doing an amazing job, like kind of taking these amalgamated assets and sort of building like a Salesforce-like approach to the security space, where taking all these acquired things and kind of putting them together. Versus, you have like a CrowdStrike, which is much more of a full end-to-end integrated solution, where they also have the best incident response solution as well. So, when companies get attacked, Michael's former company, right? Let's say they get attacked. They guess who they call? They go call Mandiant or CrowdStrike, right? And Mandiant's now owned by Google, and then CrowdStrike is a standalone. So they're just stalwarts.
So Google has so what's it called? Google's product?
Mandiant.
Mandiant.
Yeah.
Yeah,
So,
I mean, I think in a deglobalized world, so this is a trend that you see continuing at Boldstart. The one thing about we talked about it last week, we've never been in a deglobalizing world where software, a growth industry, is part of it, which is software, right? Like you build walls so that you think of austerity, you think of what Stevie Cohen's saying, maybe this is where he's getting wrong. There's certain areas that become growth because software exists. We've never had a deglobalizing world where there's software. So you actually have areas of software that are growing, even though the world is shrinking and putting up walls right now.
yeah, I mean, I think again, like go back to deepfakes, right? All of us, we're all on our videos are out there, our voices are out there, right? So it's not hard for someone to take my voice, spoof it, send it to my mom, and get some capital from her, right? So this is the type of scary stuff that's going to happen. And so I think it's actually interesting where it's not just corporate security, but also consumer security might have a second wind as well, where you kind of have this, the McAfee sort of antivirus filters. They need to be completely refreshed for modern systems and for video communication, stuff like that.
Hey, look, we had somebody create a Telegram group, and then do a phone call to our treasury team with a full voice of one of my co-founders asking for funds to be moved. Impossible to tell the difference, only because of we have a very stingy accounting team who normally say no. We got saved. But like this stuff is scary. Like before, think about it, before you needed a lot of manpower to make these things happen. Now you've got an unbounded number of people that are coming into the scam world, right? Like AI basically makes the multiplicity of effect of having so many people that can come in and attack systems. It's just, how do we deal with that? I think the systems we have right now for antivirus, for threat monitoring, all this has to be upgraded because the threat level has just changed, or the threat vectors are completely changed as well. So yeah.
Well, I think we're starting to think from this group aside, price leads to nothing like price to change sentiment. So let's think about this, right? Prices are coming down. All the stuff we knew, but just no one cared to talk about, was known. We knew this stuff was going to happen, but now we're talking about it. Let's reframe this in the whole frame of things. Like, how big an issue is this? Like, cyber's not the problem's not the problems are just going to get solved, right? Like, people are going to have to be careful. The world will go on, but it sounds like from this group, tariffs is the number one thing that we can all agree on, that no one knows what's going to happen, but our intuition is it's a tax. It will change spending patterns, and people don't know what to expect. Yeah, people are going to be surprised by what they see, is what I think.
I think that's really well said. I mean, I remember the funniest thing was there was a group chat, and it was a bunch of software investors, and they were just like, "Oh, like tariffs won't impact us," and I was like, "What are you thinking?" Like, literally, it goes into everything. If Nike, or maybe Nike's not the best example, but On Running is no longer selling as many shoes because the prices just went up a ton, well, then that impacts how much they'll spend on software. And that's going to impact all of us. And that just flows through the whole system. So it's a really multifaceted thing that impacts everyone, even if it's not maybe phase one, but phase two comes for all of us if that's the impact.
And this
Go
is
ahead, Mike.
despite the flashy deals, like Apple just said, "Oh, we're going to invest, 500 billion in the
500
U.S.
billion.
500 billion." Ironically, it's about the same they were going to do anyway, but it's a great headline with the president to announce that. But the reality is that so that what that does is it protects the iPhones a little bit from the tariffs, but everything else around, everything else you get is going to be tariffed, and you're totally right, Shomik. The value chain, the cumulative effects again of these incremental prices is going to be awe-inspiring in a not good way.
Okay, Phil, what was next for us to talk about?
Let's go to the most interesting chart in the world. The funny thing about doing this is that the world is changing so quickly that no matter when we come up with the most interesting chart in the world, it's not the most interesting chart in the world anymore. So we have like 5 other charts.
That's the whole point. Like, it's a moving target.
It's a moving target, but this one, so Walmart reports the other day, and this chart is so anybody who's been around for a while, watching the internet build, watching Web 1.0, 2.0, and now 3.0, knows that this is an incredibly significant chart. Here we have quarterly revenue at Walmart and Amazon converging for years over time. And this goes back, way further than 15, this chart. And now for the first quarter ever, both of these companies are doing over 175 billion in revenue per quarter. So they're getting up towards the $1 trillion in annual revenue club, which is unfucking believable. But here we have, finally, after all these years, Amazon is surpassing Walmart in quarterly revenue.
All right, can I go first?
Go ahead,
I'll
Howie.
apply
You're the
to
guy.
what I know of the Degenerate Economy Index. I added 2 companies this week, Uber and DoorDash. I think they're directly related to this. We don't have choices. We have incredible choices, meaning, hey, honey, I don't like to order from Amazon. Here's a link. Order me this book. Order me this tripod for golf. Order a camera. So yes, the Lindzon household. And by the way, Amazon Prime with movies. I can't believe people complain about Netflix, because if you want a new movie on Amazon, it's $19, which I still find is an incredible bargain, rather than going to the movie and gas and parking and the mall and loud people in the theater and uncomfortable this and spending $40 on bad popcorn. So this is an incredible chart because it takes into account 2021. There was that bump, the COVID bump. You can see the big bump, but it really, unlike Shopify, did not pull back because it's probably such a diversified revenue base. But really what this shows to me is that the mall, while not dead, is less and less. I went to the mall this week. I go into the mall like an army platoon guy. Stance socks, Lulu underwear. Get me the fuck out if I don't need anything at the Apple store. It's surgical, right? Like, and I always hate it because the Lulu store is bananas, and the Stance store, I'm like, how are they running this with 3? Why are 3 people in the shop? So the mall's fucked. That's obviously still an issue. But this just shows me that when my kids are using DoorDash and Uber, the free time that's created by this Amazon chart mostly is just a way food's delivered. Instacart, I guess, would fall into this, is really fascinating. So you can just see that even post-COVID, higher rates, inflation, whether it was transitory or real, Amazon works. And the American consumer and whoever else is using Amazon loves the product, and they're just gobbling up everything. So kudos to Amazon. Whether it plays out in the stock price, I don't know. I'm doing derivatives of this with Uber and DoorDash. Take it away. Who's next?
Yeah. So if you back out Lindzon's spending on Amazon, Walmart is still actually slightly ahead.
I don't spend on Amazon. Ellen does. Keep going.
Ever so slightly. Lindzon household.
Go ahead,
They're still
Mike. What do you
slightly
see
ahead,
here?
but the trend is. Anybody else on this? I mean, it's incredible.
Yeah.
Going back, Michael.
Walmart, obviously iconic. Sam Walton, amazing entrepreneur. He's gone. His family, one of the biggest family fortunes in America ever created over, 30, 40 years. I bring it up because these are extraordinary wealth creation vehicles for shareholders, right? Walmart is in every portfolio. Amazon, Jeff Bezos, we all watch him. He famously said that, look, I'm one of the richest people in the world, true, but in the 25 years that Amazon's been Amazon, and it's now less than still 20% of retail, even with this chart, over 65 to 75% of the value created in Amazon has accrued to investors. I just want to highlight that these are huge return vehicles in terms of wealth creation that we cannot underestimate. Walmart, one of the biggest family fortunes here. In Europe, IKEA, one of the biggest families, not quite the same overlap as Walmart, but hundreds of billions of dollars of value. I just wanted to underline, these are wealth creation vehicles for investors, individual and institutional, that it's often lost sight of, and this is all accelerating. And Howard, you're totally right. The notion of delivering this stuff to your home, whether it's Uber or DoorDash or Instacart, Walmart's biggest growth area has been pick up at curb. They innovated around that. The stores are essentially warehouses. You go there and pick stuff up. They put it in your trunk, etc. Those are big behavioral changes, mainstream changes that are going on, and that also is just starting.
The part of this chart that actually that is interesting to me actually is so, one of my favorite things in the public markets is to identify like the Silicon Valley or the Twitter filter bubble. And what I mean by that is when you look at, if you talk to anybody in tech, right, they're like, Amazon is killing Walmart. You look at this chart, Walmart has CAGR'd revenue at 5%. Right now, by the way, if you look at the stock price over the past, call it 2 years or whatever, 3-year period, it's actually beaten Amazon. Right. And so you have this unique dynamic where basically, the one of the best kind of positions that you could have taken last year, and actually Trends with Friends was talking about this, was Google back in March. And so this is when Gemini came out and everyone was saying Google's woke and like, oh my God, they don't know AI and they've fallen behind. And oh, by the way, Perplexity just raised at $1 billion because it's got 10 million of ARR and it's growing so quickly and my kids don't use Google anymore, right? There was all this stuff going around. And ironically, the best thing to do was actually go 100% into Google and just own it, right? And I think that's what's happened again and again. You saw that with Nvidia has had multiple bubbles where Sequoia put out their $600 billion question thing. Michael's old firm put out their thing, and the stock traded down to like 104 in the midst of one of the most massive waves to Nvidia you've ever seen. You saw that with DeepSeek recently. You're seeing that with stocks like Adobe, where I think they're getting unfairly punished for not being an AI winner, right? There's all these sort of dynamics. And so just like broadly, I would say like try and observe these filter bubbles. And more often than not, if the price has reacted, you can take the other side and make some really, really massive gains with little risk, which in this market is frankly like the best thing you could ask for.
Very good point.
Thank you, Shomik. Speaking of that, speaking of Nvidia, they report tomorrow. And so now all of a sudden we have this, the market selling off. We have that Mag 7 ETF chart. It's gotten hit pretty hard. We're going to take a look at that in a minute. But anybody have any thoughts on Nvidia? I'm going to lean towards Michael on this, but anybody chime in.
Yeah, I mean they are basically going to be sold out on the chips. The big concern with the DeepSeek thing was that their newer products are not going to be as much in demand because we can do more with the older products. Not true. The newer products are basically huge efficiency machines. The amount of inference that they can do for less size, same price, same volume in the data center is extraordinary. So they are not going to be able to make these things enough. And obviously, the other thing to keep in mind is TSMC, which is the fab company in Taiwan. is another key piece of it. So I'm very excited about Nvidia on a secular basis. Again, the headwinds we have to watch for. Again, the White House stuff, tariffs that we talked about. Trump is talking about putting tariffs on Taiwan chips in Taiwan. If that happens, those are headwinds to. You will get opportunities to potentially buy these things cheaper. Second thing is also the AI diffusion rules that Biden's administration put out in the last few days of its days. And Trump has about a few more days to figure out if that can be rejiggered. What that means is basically we will not tier, if he changes it, the customers who buy NVIDIA chips into tier 1 to tier 3, and they can potentially sell even more of the chips that they're making that they're already allocated if the world is simplified again in terms of being able to sell these things without onerous licensing regulations to countries other than China.
The other thing I would add on to what Michael's talking about is like timeframes really matter too. Is right now I would say like the risk to Nvidia is not that, like, this is a massive secular tailwind. If you're going to own the stock for 5 years or something like that, it doesn't matter. That being said, if you are worried about shorter term, do you need to pay for your child's education or stuff like that? What people are worried about here is, like, when you look at Dell, Supermicro, Vertiv, right, who have reported, they haven't like kind of blown the cover off the ball on their earnings estimates. And why that's important is because they are actually the ones who are delivering the liquid cooled full racks of Nvidia. And so if they were blowing things out, right, they'd be like, oh hell yeah, we're all going and partying in Cabo and doing whatever, right? They're not. They're kind of being more measured. And why that's important is because this so-called air pocket, right, where people are worried about, is there a digestion period from the massive build out that we've seen, and if so, what does that mean to Nvidia stock and frankly to the AI complex as a whole? And so that is a question. Again, we're talking about, these are difference in timeframes. So this is like, if you're worried about the next 6 months, right, that's something to consider and think about. But if you're going to hold for like a long time period, Nvidia is going to be sold out left and right for as long as we can imagine. And so is everybody else in this ecosystem. But just be aware, on a shorter term aspect, there is these dynamics that people are looking out for.
It feels like it's like a Boeing without an Airbus, right? Like, if you look at it that way, they're just sold out, right? Like,
Well said.
There's
Well said.
ASML, of course, which I own,
Good
but
analogy.
like, we need an Airbus to keep Nvidia honest. And again, unless everybody's lying to us, the Gerstmans
5 years.
and the Andreessens and Michael Parekh are
Minimum.
lying to us, it just seems that software hardware thing that we've been drumming on about, plus deployment, plus great CEO, plus, again, their mistakes will happen, but it just feels like everything else is kind of noise. Yeah, we could argue about the price or quarter to quarter the numbers, but they just no Airbus.
Howard, you hit it on the head. This is Boeing without the Airbus. And remember, Boeing was Boeing for decades before Airbus showed up. So, and it's going to be a long time to have an alternative here. It just is.
But if you throw a NVIDIA thing out of a Boeing, it's still going to break.
You know what's crazy is actually, and Michael, I'm curious on your thoughts here, but like the craziest thing to me is, it's not that, like, AMD chips are actually like pretty good. Like their GPUs are not bad, right? Yes, they're behind NVIDIA in capabilities, but they're still pretty good. The biggest challenge is that the software to use the AMD chip is a complete like clusterfuck, right? I don't know if we're supposed to curse or not, but like it's horrible. And you have that, and so meanwhile ARM is pushing into software, which is actually really interesting, and AMD somehow seems to be like sleeping at the wheel. I don't understand, but anyway, Michael, you've studied more. So.
No. The software is the CUDA is the big moat. I have a big post on NVIDIA from a few months ago that talking about the moat. But it's what Adi was talking about. Look, software once installed, it's very tough to rip out, or so even if AMD comes up with the best alternative CUDA, or let's say Google gets its act together on the non-TPU stuff or the TPU related stuff they're doing, it's going to be, again, decades, years at least, for developers to change their habits, to take the new stuff and build it with the new stuff. It doesn't happen overnight. even if you test out a few AMD chips over here on this data center, yeah, you in a world where everything, you're going to need a lot more compute anyway. We have a chart coming up with the 3 scaling laws that are just going. That's the biggest chart from my point of view for this week and probably this year and next year.
Pull it up.
Can we show that one? That goes back to the beginning of this conversation too. It's a GIF that you put. Is it a GIF or a GIF? I still
every
don't
time
know.
you look at Nvidia down 4, 5, 10%, just look at this chart. Just take a deep breath and just hit. This is not a stock recommendation, but every curve here.
But it is.
These are buzzwords, and I've written a post on it just a couple of days ago on this. I call it the trifurcation of the scaling laws. Is buzzwords, but just think about every of one of the lines is basically 100 times more compute is going to be needed to do the computation as people do these fancy things called post-training scaling or the test time scaling, long thinking. Basically, the more we use this stuff, Moore's law, we use computers, but we didn't use computers at the level of annual change. My spreadsheet use over the last 20 years may have gone up 2% a year, maybe. Here, what my AI use is going to go up hundreds of times a year as an individual, as a company, etc. All of that requires compute. That's what these charts are, and that's why the hyperscaling stuff is just very important. And Nvidia
I go back
Boeing.
I go back to anecdote of my wife and probably everybody's wife, but including our kids. Shomik, do you have 2 kids?
1 6-month-old.
One. And Adi, kids?
Wow, congratulations.
2 kids, yeah.
2 kids.
That's
so
awesome.
we know. So we're all. You guys are to be the ones with younger kids in this AI world. School's dumb. You guys are gonna have to deal with that, the homeschool crossover. But I think about AI from my wife's point of view. I see the delight that she has as a successful real estate agent, truly leveraging AI. Her hardest part of her job was writing up descriptions of the neighborhood, the Zillow, changing because some people can't write. And even if you are a great writer, what a magic trick. So it's already disseminated down to real estate agents, right? It's disseminated down to financial. Remember how Bloomberg didn't give a shit about crypto, and then as soon as AI came out, set up an AI task force, right? So in health, maybe not healthcare. That'll be the ultimate, but people are using it for healthcare. So I think AI is the first thing that went right to the lowest common denominator, which you had those charts like enterprise software company. Shomik is an enterprise investor. We had those charts 0 to 100 ARR. This went right for the gut. This went right for Wall Street. This went right to the housewife or the real estate agent or the student that struggles with reading. This was the ultimate
advisors
magic,
also.
Right? Advisors, so people that would never pick up tech. So the second question then becomes investing in this world. So yes, Nvidia, obviously we all know. We know blockchain is going to get better. We know security, as we've talked about, that's going to get better. The most important thing is, how do you discern companies that have a moat, that grow revenue quickly, but it's kind of fake? It's tourist revenue, right? It's like revenue that may not exist. And that includes the people that swap out of $200 OpenAI for free deep search on Perplexity and Gemini, or Perplexity and something else. So how does that, I just feel that's still the place that we don't know that's going to happen. Do you guys, Ali and then Shomik and then Mike, what are our thoughts there? Go ahead, Ali. I mean, Adi. Go ahead, Adi.
Sorry, what's the question? I missed the question.
Well, the question is, how do you see AI? The leaders now, OpenAI, Gemini, Perplexity. What's fake revenue and what's real? What's sticky and what's not? We know that Nvidia is sticky, but what do we think about how sticky the players are?
So I actually think the thing around models is going to be commoditized anyway. I think that's all going to be commodity. I think the application to build on top of that is where the value is going to be. And I think you've already seen a lot of that with OpenAI. They're building further up the stack and adding value there. that's where the intelligence really is going to lie. Like, you're going to have to build apps that people get to use. The model is going to be as commoditized as ever. People are going to keep finding optimizations. And I'm sure next 2 weeks we'll find some other new model that someone's come up with a new optimization. But I don't think that's where the money is going to be. It's going to be in the actual applications further up the stack. It's no different from what we see in the traditional software world, actually, that people always, the value is always further up the stack than anywhere else.
Shomik, as a seed investor in this space, what gets you excited and what are you worried about?
Well, so one thing that I would say that's interesting is just how each of these companies have sort of already developed their own taste. So Anthropic is very deep into code.
Correct.
Everything they just ship model context protocol. As a seed investor, I'm very excited about what that will enable with external tool calling. But they are going very deep into code, right? And so they're solving it for developers. OpenAI is kind of this blend of like consumer / app layer stuff that they're building. And then Google is sort of like, hey, we just push the edge of everything, right? And we do deep research and we do, we'll do stuff around quantum and like, we'll just be this cutting edge sort of thing. And Meta's kind of doing the open source thing. Grok takes, hey, we're going to be the cultural influence on all of this, right? So like they already are developing their tastes and verticalizing to a certain extent. And I think that's one of the most interesting aspects is for a builder. It's actually, you can actually choose what will work. So if you're building like a code gen tool, you actually probably want to go deeper into the Claude ecosystem, the Anthropic ecosystem, because of the fact that they're doing to push things forward there versus kind of going deeper on OpenAI, even if their reasoning capabilities and stuff go quicker. It's just the tools and the external stuff that you can do. The integration is going to be better on the Claude side for a little while.
Good,
Michael?
Yeah, I agree. Both with Adi and Shomik, the amount of change that's happening is obviously crazy. So Howard, your point is right. The media is totally focused on, oh, this week this thing's better, that week next week the other thing's better. Don't get distracted by that noise. Basically, all of these companies are working super crazy hard to build the innovations. Focus on if you're a developer, you have to play with all of them. If you are an early adopter of these consumer things, you have to play with all of them. For mainstream people, it's going to matter 2 or 3. Every tech thing that you ever use, like, or non-tech thing, Coke and Pepsi, Dell and well, I can't say Compaq anymore, but it became Lenovo, etc. But what I'm saying is, the first few years, the first 2 or 3 tech companies, they're going to be in the mix. So right now it's OpenAI, and obviously Anthropic and Google, and then everybody else, Grok, etc. I would put in there. But it's noise to worry about which one wins. This business of I agree with Adi that the opportunity is in the application layer. It's always in the application layer. But infrastructure here is so bloody critical that we don't have enough of it. There's so much innovation. It's getting redone. That 3 scaling laws thing. Every one of those coding models are changing. This year, big trend. I'm just writing Claude. Anthropic just announced Claude 3.7. They're doing exactly what OpenAI just announced 2 weeks ago, which is we're going to simplify our models. We're going to put in reasoning. We're going to put in agentic. You don't have to worry about it. You're not going to have to click on a drop down to pick which model you want. All that is for the early developers and early adopters. That's changing. And this stuff always gets easier. All of that is happening. It's a good thing. As investors, don't get distracted by it. Last thing I'll say, the top 2 or 3 companies in every tech wave, they're building flywheels. It's not just the technology that's changing, it's the users, the habits, the partners, and that flywheel is what makes the franchise, the moat, etc. Nvidia's Nvidia because they built that flywheel over the last 10, 15 years when no one was watching. CUDA, the software framework, it was a flywheel. And that is why there's only one Boeing and no Airbus in the AI GPU space today. OpenAI is building a flywheel. Anthropic is trying to build a flywheel. So keep an eye on the flywheel. Don't get distracted by this week, this one's ahead, that one's ahead. It's noise. As a user, as an investor. And if you're a seed investor in some of these things like Shomik seems to be, just hang on. Hold it.
Fantastic. Phil, was there anything else you want to cover, or we're going to let everybody go? Where can we buy Sui? You can go to Coinbase and buy some Sui. I own a little bit in the 2s, right? So where's the easiest place to buy it?
If you're in the US, Coinbase. If you're anywhere else in the world, you got Binance, Bybit, BitGo. I'm sorry. Basically, almost every top exchange in crypto has Sui. Sui is already, it's the youngest token in the top 15 actually. So it's
And
actually one of
what's
the
the
fastest growing.
what's the scariest moment for you in crypto where you thought you got hacked or lost money? What's been the scariest moment?
So actually, the scariest moment was empty Gox, right? Like I was hearing rumors of
That's kind of a
issues at
flex.
Gox.
That's a good flex.
I remember that. Like I got my money out literally 2 weeks before the thing really
Wow.
hit the fan.
What is that,
So
like
that was
2013, 2014, something way back?
then I'm even missing dates. It was all I do remember one of my
It was years ago.
developers had a good call with the founder of the exchange, and he was asking basic questions around how he was managing keys. We're not getting really good responses, and we decided to get out, and that saved our business. Really did at the time.
And
That was scary.
who introduced you to Bitcoin? What was your moment where you said this is what I
It was a colleague of mine at JP Morgan. I remember I was on a trading desk and he was reading this white paper. I read it, I thought it was a scam. And then read it again and realized this code is amazing. Like, I couldn't wait to get involved. Yeah.
what's your
That's awesome.
aha moment? What was your aha moment? Shomik?
Aha moment for crypto?
Yeah.
I don't really know, to be honest. I think it was just like my friends just started, building on it, and I was just like, okay, well, this sounds interesting because a bunch of people were building on it, and then the person who did a PhD with my sister basically put all of his money, his life savings, into Bitcoin. I should have followed him, by the way. I did some Bitcoin. Unfortunately, I didn't follow him when he sold all his Bitcoin and got into Ethereum when Ethereum first came out. So he has compounded his capital at a rate that is kind of crazy. But what can you do? Follow smart people.
All right, beautiful. Phil, what else do we got?
I just have one last comment. So today is a difficult market, and a lot of volatility, a lot of uncertainty. Things are moving very quickly, and it's easy to let the world get away from you. So my only tip for today is like the don't be an idiot thing is, focus on yourself during these moments. You could tune out. I mean, with me, I buy S&P 500. I figure all of the companies there are going to be positively affected by AI and efficiency and logistics over time. And just if you don't have a handle on that, I mean, we have guests today who are experts, so they know, and Michael, and they all know, and Howard, just by osmosis, they all know how to maneuver in these waters. If you don't, if you're more like me and you don't, just focus on yourself. Focus on getting away from the tape. Focus on getting away from all of the noise, getting out in nature, taking care of yourself, moving your body, eating a good steak. And all those things will give you more capacity to jump back into this world and navigate it in a rational manner.
Live
Yeah, I
well,
would
be
say
well.
if you're doing it well, today's the day you're looking at your list that you built of stocks you wanted to buy, not looking at stuff to sell. Again, it's hard to get into that mode. It's fun, the headlines are creepy right now. But these are the days you're supposed to, if you're doing things right, be calling your smart friends and building lists. The time to have been shedding stocks was, over the last 2-3 weeks when everybody was pretty cocky, said Trump was launching meme coins. So there has been warnings, and I think good investors, including trends, where I ride these trends, they end. You have to kind of look for the warnings. So try and do less in when the VIX is rising, and also try and train yourself to be looking at things to buy. You don't have to buy, but try and get in that mindset of like doing the opposite. So, all right, boys. Anything to add, Shomik, on that?
One thing I just wanted to so as an OG listener, I do miss the trends with no friends segments. Hopefully we can bring
So
that.
give us one. Give us one. I think
No, you got a great
German
one.
defense.
Hit us with it.
German defense.
Yeah.
So here's the trends with no friends. So we've talked a lot about tariffs, right? What that all is nationalist policies, right? It's my country is the best and nobody else. And so what that means is that in the NATO sort of thing and stuff like that, we have this dynamic where we're going away from the U.S. is the world's protector and does everything like that to each country now needs to protect themselves. And this is happening in dramatic ways. And so Rheinmetall is predominantly a German company, although they serve many countries across Europe and actually the US as well. But Rheinmetall is a German defense company. It is taking off. There's Leonardo, which is either Italian or
DRS. Yeah, great company.
That one also is going. There's Thales, which is the French version of it. That is taking off. BAE Systems or whatever is in the UK. This is a massive trend, because if you think about it, the US defense complex is trying to compress spend, right? We're trying to get efficiencies because we've overspent. But meanwhile, all these other countries actually need to catch up, because now they need to get the F-30 whatever fighter jet, and the new laser for whatever, and the drones and all this sort of stuff. And the only way they can do that is to go into their national defense players that they trust. So this is a massive, massive trend. The charts have all broken out to new highs, but it's only like, when we talk about spend, this is AI level spend. The French president, Macron, he gave his whole thing about AI, right? And how they're going to plug. And then the next speech he did was actually about how they're pushing forward on defense. So this is a massive, massive tailwind in Europe, and something that I imagine not many people are following, but should be following more.
And to explain what trends with no friends is, what we coined here on Stocktwits is fine. That's a 40 Renminbi is a $45 billion German company, I think, or French German company.
Rheinmetall.
With 500 followers. Leonardo, same thing. These are stocks making new highs every day. They're not fancy, but money finds a way, right? Like these trends with no friends people are allocating capital that are very smart and have a lot of information. So this is a deglobalization. It's another part of deglobalization in a weaponized world is, we're forcing those guys, much like Facebook had to get austerity and get their shit in order. The Europe's going to have to fight for themselves right now, and that money, right or wrong, is flowing to defense. Like that just makes common sense. So interesting call. We generally have that on, but good point for OG listeners. We'll bring that back. Anyways, thanks everybody. I'm going to let everybody go. Adi, what a pleasure to meet you.
Thank you. Awesome.
Thank you.
Your twin brother Shomik. Shomik, great time to have you on the show. Say hi to Ed.
Will do.
Michael, all of the Catholic world appreciates you stepping in for the Pope. And if you haven't watched the Conclave, watch it. It's creepy. And then Phil, speaking of creepy, good to see you, buddy. Welcome back. And we'll see everybody next week on Trends with Friends.
Adios, guys.
Bye.
Bye, guys.
Bye all.